Snyder, and thank you so much for joining me for the Sane Crypto Podcast, the first cryptocurrency podcast for baby boomers investing for retirement. Most people believe that crypto assets are too risky for the average investor. I believe the risk is in not investing, and that in fact cryptocurrency may be the answer to near retirees' prayers. The trick is to structure our investment so that if the naysayers are right, we don't do irreparable harm to our nest egg, but if the believers are right, we make potentially life-changing money that could catapult us across that retirement finish line. The Sane Crypto Mastermind is my signature program for those who want cryptocurrency-type returns, but can't, won't, or don't have the time to figure this all out and keep up with it on their own. If you'd like to learn more, I would encourage you to join my free online training, how a little bit of Bitcoin can make your retirement savings go a lot further at sanecrypto.com/retirement. This week we are once again going back to the listener mailbag. I got this email, it's been a little while back now, from a former client, Nancy. She says, "Hi, Kim. I'm enjoying your explanations and evaluations as usual. I have a question that I thought you might or might not want to address in view of the current political climate in our land. If inflation is imminent, what stability or lack thereof can obtaining cryptocurrency in advance of rampant inflation provide? My thought behind this question is that due to crypto not being tied to the currency of any specific country other than the transaction you make to initially obtain it, an investor in cryptocurrency could theoretically cash in their crypto in another country in that country's currency and effectively bypass devaluation of their currency in their homeland. Of course, this presupposes the individual can get to another country, perform the essential transaction to cash in the crypto, and stay in that country for a period of time." End of question. That this is an awesome question. And as I wrote back to Nancy at the time, I don't see it as politically charged at all. It is, in fact, a really important question for family CFOs to understand, regardless of your political views or current outlook for the country or even the world. So I really appreciate you bringing it up. So let's dive in. The first thing we'll do, as I often do, is dissect the question just a little bit and, just to be clear what we're talking about. So the main thrust is, would owning Bitcoin and or other cryptocurrency act as a hedge if we were to experience either inflation, a systemic financial crisis, or even some sort of, really terrible geopolitical event? Now, of course, all of these things are a matter of degree, but let's just start off by defining inflation. Investopedia says inflation is the rate at which the general level of prices for goods and services is rising, and consequently, the purchasing power of currency is falling. So generally, what happens is because prices are rising, your dollar or peso or yen or pound, it just buys less. And if prices rise fast enough or far enough, we refer to that as hyperinflation. For those of us here in the United States and old enough to remember the 1970s, Michael Bryan of the Federal Reserve Bank of Atlanta wrote, "The Great Inflation was the defining macroeconomic event of the second half of the 20th century. Over the nearly 2 decades it lasted, from 1965 to 1982, the global monetary system established during World War II was abandoned. There were 4 economic recessions, 2 severe energy shortages, and the unprecedented peacetime implementation of wage and price controls." End quote. If you remember or look back, unemployment eventually topped 10%. Inflation is measured by the Consumer Price Index, which in normal times will typically hover, between 2 and 4%, reached a high of 15% in 1980. And the cycle was finally broken by the Federal Reserve, Paul Volcker, taking the absolutely brutal steps of raising interest rates to over 20%. And as bad as that was, right, it pales in comparison to what can happen and does happen and is, in fact, happening right now in countries less fortunate than we are. I spend a lot of time and know a lot of people because I play polo in Argentina. Inflation in Argentina right now is estimated to be running at 40%. 40%, meaning that the prices of a basket of standard consumer goods, things that you and I have to buy every day to live, are 40% higher today than a year ago. In South Sudan, right, where they're experiencing civil war, 117%, meaning prices more than double in a year. In Iran, they are 200%. And Venezuela, according to a July 2018 story in Reuters, get this, you guys, 46,305%. Food prices in Venezuela rose by 183% in June 2018 alone. There's a story on Axios, which I will link to in the show notes, along with all of these things that I'm going to be sharing with you. But I just have to share this. It says, where is it? Oh, here we go. Quoting, less than 2 years ago, a cup of coffee cost 450 bolivars in Venezuela. Today, as the nation's hyperinflation continues to skyrocket, a café con leche costs 1 million bolivar, which is a mere 29 US cents. But even at 29 cents, it's impossible to get enough cash to buy it. Back in January, a CNN Money reporter detailed his attempt to get cash in the Venezuelan capital, ultimately getting 10,000 bolivar, which was that day's allowance, because this is what happens in financial crisis, right? They clamp down on the money supply, after visiting 4 banks over 4 hours. And today, that daily allowance of 10,000 bolivars is worth about a third of a US cent. So that's what I mean when I say, inflation and geopolitical turmoil come in a wide spectrum, right? So are we talking 1970s great inflation or complete financial collapse? Everything is basically relative. And the question is, number one, current political climate aside, if these were normal times, would this be a consideration when managing an investment portfolio? In other words, is this something, well, you get the idea. Is this just something you should be considering because you are uneasy in current economic times? Is this something that is always an issue? And then number two, to the crux of Nancy's question, normal times or not, would Bitcoin and other cryptocurrencies act as a hedge, meaning to compensate or protect us against these risks, and to what degree? All right. Well, the answer to the first question is, by the way, unequivocally yes. This is really important, y'all. It doesn't matter whether we are in the best of times or the worst of times. Your investment approach shouldn't vary with the political climate. Now, I talk about this at some length in the episode on where cryptocurrency fits into an overall investment portfolio, which is way back in episode number 5, I believe. But an investment portfolio has 2 critically important jobs that it has to do for you. Number 1 is to multiply the money that you earn and save in order to create enough for you to live on over 40 plus years of retirement. And number 2, to protect you from financial risk. This is what we're talking about. It has that job always, okay? So, a lot of people are like, wait, what? Because most people have this backward. They think investing is risky. Investing is not risky. Not investing is risky, okay? So to be more specific, one of the jobs that your investment portfolio must do, and must be specifically designed to do, is to protect against this very thing, these black swan events, whether they be market crashes, hyperinflation, wars, catastrophic illness for you or your family, whatever, okay? That's its job. Because the odds are that, unfortunately, somewhere along the way, right? Over the course of a lifetime, you will experience it. We all will. It's just, the way randomness, the way the ball bounces. So up until very recently, the primary mechanism for hedging against rising prices, inflation and economic or political turmoil has been owning commodities. Commodities are the basic units of production: meats, pork bellies, metals, gold, silver, platinum, whatever, right? Grains, wheat, corn, soy, energy, oil, natural gas, etc. Okay, those are commodities. And why that makes sense is pretty straightforward. In periods of low inflation, the enterprises that produce goods and services will tend to outperform the basic commodities as they combine them together and add value to them, returning that value, in theory at least, to shareholders. That's why, right, part of your portfolio is stocks. But in periods of high inflation, on the other hand, the basic commodities will tend to outperform the enterprises, as by definition, the prices of the commodities are rising. But the corporations will have a negative return on capital. So as Warren Buffett said in a 1977 piece for Fortune magazine, the arithmetic makes it plain that inflation is a far more devastating tax than anything that has been enacted by our legislatures. The inflation tax has a fantastic ability to just simply consume capital. To which he adds, if you feel like you can dance, by the way, this was 77, like right in the middle of the great inflation, but still, right, it applies today. He says, if you feel like you can dance in and out of securities in a way that defeats the inflation tax, I would like to be your broker, but not your partner. Meaning, market timing is a fool's game designed to make your broker rich, not you. You can't switch between these different asset classes based on what you think will happen in the future, or some guru or newsletter writer tells you, okay? Which is a very long topic for another day, but I promise you it is impossible to make money this way. So the solution is, if possible, to always be holding a diversified portfolio where different assets have these different jobs. Some of them to earn, some to protect. And, to the extent that some can do double duty, so much the better. So going back to the portion of our portfolio whose job is to hedge against risk, for thousands of years, the gold standard among hedges has always been, wait for it, gold. But now there's Bitcoin. So is gold or Bitcoin the better hedge? There is a chart that I use in my free training, how a little bit of Bitcoin can make your retirement savings go a lot further, that compares gold, Bitcoin, and fiat currency. And again, just to define, if you're listening to this podcast, you probably know the term, but fiat currency is government money. So dollars, pounds, pesos, yen, etc., right? Rubles. That's known as fiat currency. The chart comes from an excellent series on Medium, which is written by Vijay Boyapati, whose name I am sure I just mispronounced badly. The series is called The Bullish Case for Bitcoin, in which he makes the case for why Bitcoin is a better gold than gold. And the factors he compares are, between the three, which is more durable, portable, fungible, verifiable, divisible, scarce, has an established history, and is censorship resistant. For purpose of this discussion, there are a few advantages that Bitcoin has over gold that are more compelling than others of them. For example, portability. So, this is a place where Bitcoin is really, really interesting. Again, depending on, degree of what we're talking about here, because of course, if I'm fleeing the country or, my village, right? I can literally carry billions of dollars of wealth across a border. on my person, in my pocket, or even in my head, literally, right? Or maybe I'm not fleeing, but, just storing physical gold in multiple locations where I can get to it and others can't is challenging and costly, to say the least. Moreover, it's very difficult to spend or pay people in gold, or even buy and sell it person to person. One of the points in Nancy's question in terms of the mechanics was, quoting, back to her question, of course, this presupposes the individual can get to another country, perform the essential transaction to cash in the crypto, and then stay in that country for a period of time. That wouldn't necessarily be necessary, which is kind of the beauty of it. There are people all over the world spending Bitcoin and accepting it for payment, even getting their paychecks in Bitcoin, and because, this is really, our brains tend to go to dollars, right? Or fiat, and how, what that would mean. But because there is, as you pointed out, Nancy, no intermediary, no bank, no government, I can just transfer it from me to you. I can literally send millions of dollars across the world in the blink of an eye, instant. No Swift wire transfers, no nothing. Literally, I can send you millions of dollars for a couple of bucks in network cost. Okay? So eventually, as it becomes more and more common, there will be less and less need to ever convert it into a fiat currency. And as we have seen in countries that are in true crisis, that is even more the case, because people prefer something that holds or even increases in value when their currency is losing value so quickly. Take Zimbabwe as an example. On October 23rd, 2017, amid a shortage of their fiat banknotes, Bitcoin prices traded around 9,600 on the Zimbabwe exchange. But elsewhere in the world, right, global Bitcoin exchanges, the price at the exact same time was $6,000 US. Okay? So in other words, what was happening was demand in Zimbabwe, which is kind of a closed system, was a closed system, pushed the price up well above the global spot price. And an article on Quartz Africa, someone from that exchange in Zimbabwe said, interest in Bitcoin has peaked as people can't send money outside or pay for international transactions using formal banks, said, and I can't get the name right because anyway, people have had to look for alternatives, and Bitcoin has been a useful solution which can be used to purchase goods on Amazon or to pay for vehicles from international suppliers and traders, she said. Likewise, financial difficulties in Greece and Cyprus have been widely credited with pushing the price of Bitcoin up in 2015. And then, of course, we have Venezuela, which is the poster child for Bitcoin. I'll link to, again, all these articles if you want to read more. But basically, quoting an article in Forbes, they say, as the bolivar continues to fall, many Venezuelans are turning to Bitcoin as an alternative. Humanitarians can donate Bitcoin to those in need, who can then use Bitcoin to buy Amazon gift cards, then purchase goods through the online retailer. One of the biggest strengths to Bitcoin, and one often ignored in developed nations such as the United States, is that you don't need to have a physical bank account to send and receive Bitcoin. That's what I was just talking about. All you need is an internet connection, which many Venezuelans have in the form of mobile phones. This lowers the bar for Venezuelans seeking relief, allowing them to receive Bitcoin through their phone, by the way, bypassing all the government corruption. This is just another topic, but you know what happens when we send aid to all these countries. Half of it, gets funneled off to some strongman or whatever. This is a way for humanitarian relief to be also sent peer to peer. So anyway, going back to this, allowing them to receive Bitcoin through their phone and use that money for desperately needed goods. Some companies in Venezuela are even exclusively accepting payment in Bitcoin, knowing that the bolivar is highly volatile and largely useless right now. So you get the point. Is it a viable hedge against inflation in financial crisis? Clearly, yes. But is it a better hedge than gold? Well, I would say that is still open for some debate. There are, in fact, still plenty of people who say, in a crisis, give me gold, right? They don't trust this newfangled internet money stuff. I happen to think that's something of a kind of a privileged point of view, being, middle-class citizen here in the United States with, the bank accounts and the ability to buy and sell gold, which clearly if you're a Venezuelan, you can't. But, but nonetheless, right, there are several arguments for gold, especially if the proverbial shit is really, really hitting the fan. One is that gold has been around forever. Bitcoin hasn't. In a true global crisis, would more people flock to gold because of a comfort level with gold as a hedge? Thus driving the price up much more than Bitcoin and therefore serving as a better hedge from a strictly price perspective. Don't know, right? Guess it depends on. We don't want to find out, right? Another is that Bitcoin relies on the internet and therefore electricity. And then finally, there is the volatility. If you're holding Bitcoin now in your portfolio to serve that protective function, while you're holding it, it subjects you to those nerve-wracking ups and downs in that part of your portfolio. However, now, by the way, holding it if you're in Argentina, my friends always say, who cares about, Bitcoin going up, up and down 5% a day, when our prices are going up, 50% a year. So, volatility again is a relative thing. But for those of us who are holding it as a hedge, that's definitely an issue. However, as I've argued in my podcast episode, I think it was called How I Learned to Love Volatility, and you can too, so long as you're not overexposed and have way too much of your portfolio in it, then that's probably less of an issue than naysayers seem to give it credit for. So, all right, this ended up rambling a little bit longer than I intended, and I still have a bunch of points in my notes. But, hopefully I've made the point well enough. So let me just try to summarize. One, this is not the only reason to own Bitcoin, especially here in the United States, or even the primary reason, but it is another reason and a very powerful one. Two, as I discuss in all my talks on asset allocation and in my free training, the ultimate goal of my waterfall approach to asset allocation is to first take care of your retirement income needs and then address inflation risk second and market risk third. Because most people they get this all backward. They're fighting the wrong dragon. Three, what that eventually works out to is that by retirement, whenever that date of financial freedom comes, doesn't necessarily mean it's age 65, but by retirement, that you end up with what ends up being roughly a 70-30 split between cash flow assets and alternatives, with 15% of that being commodities and cryptocurrency, and then within that, again, only to that 2% of that being crypto assets, which I talk about all the time, at least for now. Okay. Number 4, as a side note, I would caution that paper assets are not the same thing as physical assets. Okay. This is something people don't think about. Paper assets, such as, what are those? A commodity index exchange traded fund, or gold ETF, or owning GBTC instead of Bitcoin. That may go up in price, right? And provide the hedge you want against something like the Great Inflation. But to protect against a real, true financial crisis, some of that, both gold and Bitcoin, must be in your possession and control. Remember what Anton Antonopoulos always says, your keys, your money. Not your keys, not your money. That is true for gold as much as it is for Bitcoin. And then finally, no, not finally. Actually, I have a couple more points. I told you I still have a lot of notes left. Other cryptocurrencies are not interchangeable with Bitcoin as a store of value and hedge against financial risk. So notice throughout, Nancy's original question asked specifically, scrolling back up to it, if I can find it, what stability or lack thereof can obtaining cryptocurrency in advance of rampant inflation provide, right? And so I've been saying Bitcoin. Bitcoin is digital gold. Other cryptocurrencies are not, okay? Let's just be clear on that. And then number 6, remember that, one of my investment principles is we always want to plan for the best, but prepare for the worst. And the time to do that is always, right? Not when storm clouds are gathering, not when you're unhappy with, the way that the political situation is. That's reactive. And reacting is always, 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 always an investment mistake. When you are reacting, it's too late. Okay? So that job being done in your portfolio, it should been doing all the time. That's not a right sentence, right? But that's always, that it's always a consideration. And then finally, investing isn't risky, right? To me, investing is a life skill. It's like swimming. The risk is in not investing and not knowing how to invest. So hopefully that was helpful. If so, you could do me a great big favor in return, which is to 1, subscribe to the podcast so you don't miss a single episode, and also to leave me a 5-star rating and review with comments and feedback to feed the great iTunes algorithm, because the more engagement there is with the show, the more comments and ratings and subscribes we get, the more people iTunes will show it to. If not, then you go into some big, deep, dark hole somewhere. If you'd like to learn more about investing in crypto assets for retirement and my system for doing that, again, I recommend my free online training, which is called How a Little Bit of Bitcoin Can Make Your Retirement Savings Go a Lot Further. You find that at sanecrypto.com/retirement. You can get the full show notes of this episode at sanecrypto.com/podcast, which includes links to all of the various articles that I quoted, the blog posts and the podcasts I mentioned, if you want to do a deeper dive on any of it, which I do encourage. It's actually quite interesting and, helps us to get kind of out of our own little US-based shell. And then finally, if you have a question about today's topic or anything else really, just email me like Nancy did at askkim@sanecrypto.com. I read and answer every email personally, as well as answer some of them here on the show. And by the way, thanks again, Nancy, for such a great question. Everything I say on this show is for educational purposes only. Nothing should be considered investment advice. Past performance is no guarantee of future results. All investments involve risk, so do not, under any circumstances, invest money you can't afford. That's it for me. I'm Kim Snyder. I'll be back next week. Until then, may the crypto gods continue to smile on us all.